Okay, Jordan, let's talk about entering into the market. I mean, there's, multi-residential places like this that are kind of for the more experienced investor, perhaps. But there's other ways of sort of a smoother or an easier launch into being an investor. How do you advise a client who's looking to get into the market?
Absolutely. I would call this sort of the third tier of investment. So a typical investor would start off with a condo, something nice and simple, or a single family home. They might move to a duplex, triplex, or a fourplex. And then as they perhaps acquire more properties, maybe have multiple condos, you decide to sell them, consolidate. Basically what I did with this particular project is we consolidated into one building rather than having multiple properties. So you have all of your resources pooled into one. You get some synergies that way. The final step in some cases is you're not even in real estate, you're actually trading the paper on the real estate. So there's actually 4 steps to it, and I've got familiarity with all 4 of those steps.
So put that in more layman's terms for me. That's let's say I'm coming to you. I'm I own my own home. I'm looking for that first sort of uptake into the industry. What's the first thing that you look at in terms of assessing what the best route is for them?
Well, first of all, I always look at what is your lifestyle. How hands-on do you have? How much money do you have? How much do you want to invest? And typically, you might start off with a condo, which is a very nice and simple investment. It's easy to manage. If you want to be a little bit more hands-on and leverage your money a little bit higher, then you'd go to a duplex or a triplex or a fourplex. So keep in mind that every time you add a unit, hopefully you're adding on a little bit more profit. Hopefully. Now this unit is 18, so I would call it the third step. You're going from a condo to a triplex or a fourplex to a multi-unit investment. And there's many benefits to doing that, including with your banking. The more units you have, you're able to spread your risk in the investment. So there's a lot of advantages to actually having multiple units, but it's not for everybody.
Now, tell me what about the realities of being an out-of-town, absentee landlord in effect.
Well, there's a rule in investment that you should never be farther than an hour away from your investment, and I believe in that. Anything more than an hour is, an hour, by the way, is your typical commute in Toronto right now to work every day. So an hour is really not that big a deal. But that's the rule of thumb. Never be farther than an hour away from your investment, because if you don't do that, you won't be as hands-on as you need to be for your investment. So if you have an issue, you won't want to nip down to check it out or what have you. So you need to be within an hour.